Good morning and welcome back to Almus Market Mornings, your daily dose of global financial updates. Markets often oscillate between the extremes. Let's take the USD/INR and gold, for example. Both of them have come off its recent highs. China has kept its loan prime rate unchanged, and of course, one thing to note is that the yuan has not budged as well. Morning, JK. How are you reading the market sentiments? USD/INR's correction. Do you think it's an opportunity to buy? What do you think?
Good morning, Swaraj. Rupee had a few things going for it in the last two sessions, so that the dollar actually was seen probing the downside. The reduced tensions in Middle East, slide in oil prices from around 91.5 to around 87 now, improved risk sentiment, and above all, good inflows purportedly for a large ongoing public issue supported the rupee. Of course, in low 30s, we did hear PSU banks reappearing with bids so that the rate pushed back from 83.32 to 83.37 at the close. We cannot see much gains as we head into the crucial economic data from US, the GDP and the PCE inflation. All of them expected to be supportive of a stronger dollar. We expect the pair to respect the recent range of 83.20 and 83.55. And I would recommend importers to hedge near-term payables on a good dip. And talking of yuan, today the Chinese authorities have actually fixed the dollar a bit higher than one would have expected. And that, despite no major movement in, other currencies. And also notable is that the narrowing of the spread between onshore and offshore yuan also is something to not ignore. These changes may be, indicative of some big move about to happen in yuan. So let's keep a close tab because dollar yen is also near 155, and Japanese authorities today have said that the meeting last week between Korean and the US authorities has something to do with their action proposed on FX. So some interesting things may be on the way as far as the FX market is concerned. Before that, to dwell on the global market, there wasn't much of a data for Qs. Hence, most segments were ranged during the day. US 2-year is still closer to psychological 5%, 10-year at 4.7%, as we await the new issuances, hefty issuances by Treasury, how they will be responded by the market, and also the crucial data in the week. Stock markets globally saw a relief rally on Monday after easing of tensions in the Middle East, and no fresh events were reported over the weekend. Of course, we also have the markets gearing up for quarterly results from mega cap companies this week, including the Tesla, Meta, and Google, as also the Microsoft. So I think that's the reason why S&P 500 and Nasdaq rebounded from a decline of over last 6 sessions. Market awaits the results as well as the data in the coming days. So a lot to look forward to. Maybe another quiet day in prospect today, except for the PMI numbers, preliminary assessments, which will be in focus, of course. Dollar probed a new high against yen at 154.85. It is taking baby steps towards 155, where many people expect Japanese authorities to intervene, although opinion is divided about its success. Sterling still reeling from strongly dovish statements from key MPC members, but has just held above 1.23. Euro has been a better performer, holding the slightly higher range despite increasing expectations of a rate cut in June. Some of the macro data from Europe recently are noteworthy. Non-seasonally adjusted current account surplus rose about 31 billion in February. Yesterday, we had the fiscal deficit for Euro area announced lower at 3.6% versus 3.7% previous, and debt to GDP also lowered to 88.6% from 90.8%. These are numbers which are looked at from a macro perspective, and the comparative numbers in US stand at 6.5% deficit, that is fiscal, over 130% on debt to GDP. All these put Euro on a more credible macro path, and will see Euro supported by long-term investors and reserve managers. Of course, the cyclical short-term factors are in favor of the dollar because of the rate prospects, where Euro is probably going to cut much ahead of the US. Also, the cyclical data is seen supporting, is seen good in Germany as well, which has been improving from restructuring of exports to China and energy imports from Russia as well. So we look for the PMI numbers from Eurozone and Germany very closely today. Finally, gold has been the best indicator of easing Middle East tensions as it has dipped sharply, now more than 4% from its peak of 2,431. Charts indicate a fall to 2310 at least, but if it breaks 2300, a much deeper fall to around 2250 may not be ruled out. Markets moving in some segments, particularly in the dollar, are quite ranged, but I think things are building up for another sharp move in the dollar in the coming days. Thank you.
Thank you, JK. And just quickly summarizing for rupee, there is some relief as tensions in the Middle East have reduced. There's fall in oil prices and, of course, an inflow for a public issue. But what's interesting, as JK mentioned, is the Chinese yuan, because despite no major movement in other global currencies, authorities have fixed the yuan at a weaker level against the dollar. And the spread between the onshore and the offshore yuan has narrowed down. Maybe that's an indication of something that may be about to happen. Stock markets, they saw a relief rally. We have the quarterly results upcoming, and of course the PMI numbers from the European region today. Dollar JPY, it also made a new high. And one narrative which we have been reading on and which JK has been mentioning since a long time is the improving data out of the Eurozone, especially Germany. So that's something we'll keep tracking and updating. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.